Welcome back. This is Nelson Thompson, aka the Mortgage Sensei. The first series I want to start in is going to be regards to how to get qualified for a home loan, right? Getting right into it, all great information for you. Now we're gonna break it down into a series of videos to kind of shorten it up. I know sometimes it seems really daunting when they're longer than 15 minutes, just me in my opinion. But the first and foremost we want to talk about is credit, right? And the importance of credit when it comes to getting a home and so on and so forth. So the first thing you want to understand is what is credit, right? Credit is basically your payment history or your credit usage history with creditors that are reported to your credit bureau, Equifax, TransUnion, and Experian. Um, when it comes to credit, we take a look at your credit report as a mortgage lender because we're talking about extending credit to you or extending a loan to you up to 30 years or sometimes longer, right? In some cases, but in most cases, up to 30 years. And the lender is banking on your ability to repay this loan over the course of time. So credit is very, very important versus when you're going to get rent or a lease somewhere, right? Normally you're on a lease or a rent for 1, 2, years, maybe something like that, compared to a mortgage where, you're somewhere between 15 years or 30-year fixed mortgage on average, right? So credit plays a very, very vital piece when it comes to getting into a home. Now, different lenders have different credit scores, right? But what I want to talk about today is more along the lines of what you could do to qualify for a loan in most cases, whether you go with lender up the street, ABC Mortgage, or a lender down the street, XYZ Mortgage. And at the end of the day, if you know how the credit game works, then you can put yourself in a position where you can get a home loan, no matter who you go to, right? So let's talk about the big things when it comes to what makes up your credit score. So for those that don't know, you have your credit score set up where it starts at 300. Everyone starts at 300 credit score, FICO score, and you can go all the way up to an 850 credit score. So 300 to 850, right? Now, when you're looking in between, this is going to be determined based off of your credit rating, right? The first thing that you want to take into account is payment history. Payment history, right? Payment history makes up 35% of your credit score, right? 35% of your credit score. So when you're looking at the scenario here, and you say, okay, Nelson, right? The credit score range is 850 to 300, right? So that's a spread of 550 points that we're trying to get to because everybody want to get to an 850, right? All right, so you're saying 35% of that, which is 192.5 points, is made up of just payment history? Correct, right? Making your payments on time, even if it's the minimum monthly payment, and you want to make that payment before 30 days or a calendar month occurs. So if your statement date is the 15th, you want to make that monthly payment before the next month 15th or the next statement date when it comes out. That way you don't have a 30-day late payment reported to credit, right? Maybe setting up reminders, maybe setting up auto pays, right? This is where a lot of conversation about staying below your means, right? Staying within budget, right? All of these are very important when it comes to generating a high credit score. Now, here's a secret. Payment history is different from how much the payment is. So, you can have a small loan or a small credit card where the monthly payments is $25 a month, right? And then you got a big loan, say you got an auto loan, you're paying $1,000 a month, right? When it comes to the payment history, it doesn't matter if it's $25, it doesn't matter if it's $1,000, right? It is only based off of did you make that monthly payment, right? So for those that have low debt, low, monthly payments, you can leverage this in your favor, right? Where you can have, 3 accounts is what I recommend, right? One installment loan, 2 revolving accounts, right? Uh, an installment loan is like an auto loan, a personal loan. This is anything that you go to the bank, you borrow money from them and you pay it back over time, like a mortgage, right? But you can't go back to the lender and be like, hey, while I'm making these payments, can I get some more money? It doesn't work like that. Installment loan means I pay you over the course of time. paid down the balance plus the interest, and I can't come back and ask for any more money. A revolving account, credit cards, store cards, furnished cards, medical cards, they all work the same exact way. But a revolving account is you go to the lender or you go to the creditor or whatever, and you say, hey, let me get a line of credit, right? It can be, $200. It can be hundreds of thousands of dollars. It doesn't matter. They all work the same. But you go to this lender, go to this creditor. They extend you the credit. You charge up the bill, you use it, you pay it down. You use it, you pay it down. Think about a revolving door. You're going back to the bank to keep getting money within your credit limit. So when you talk about payment history, right? Whether that's installment loans, whether that's revolving credit, whether that's open lines of credit. Open lines of credit are like contracts that's reported to your credit report. Think Experian Boost, Netflix, lease payments, right? For auto or your house, right? These are reported to your credit report. It's not a matter of you taking a loan out. It's just a matter of you paying a contract for a service to utilize a product, right? A service, or whatever the case may be. So again, think car leases, housing leases, Netflix, right? Utility bills, cell phone bills, right? You're paying for a particular service and or product, and you're paying it over time. They're not extending you credit or anything along those lines, but it's being reported to your credit report. So you have those in which you're making payments to, right? And again, 35% of your credit is simply making payments on time. Now, when it comes to a mortgage, right, we like to go back, 2 years. Now, don't get me wrong. I'm not saying we only go back 2 years, but what I'm saying is when it comes to weighing your credit score, we really pay close attention to what has happened within the last 24 months. So ideally having no late payments, no 30-day late payments, no 60-day late payments, no 90-day late payments, or anything longer than that. Ideally having no late payments within the last 24 months on your credit report is key. And again, the trick is all you need is 3 accounts. They can be $25 each. And you can just make those payments on time, set up on auto pay cash for everything else out there like the Dave Ramsey thing, but you can leverage credit in your favor, right? So that's 35%. So the next thing is, okay, Nelson, so 192 plus 300 means now we're at a 492 credit score. If you make all your payments on time, you don't have anything else, no revolving credit, no nothing like that. Now, going back to the standpoint, so 850 is your high end. Everybody starts with a 300, right? So we got 550 points in order to make up. Now let's talk about revolving credit, right? Revolving credit and only revolving credit is based off of credit utilization. This is how much do I use my credit in order to pay for my expenses in my life, right? So 30% is 165 points, 165 points. So we got 165 points plus 192 points if you make all your payments on time, plus the 300 starting limit. We're already at 650. Now, with revolving credit, what you're really looking to do is keep your balance under 10% of the credit limit before the end of your billing cycle, right? Now, what does that mean exactly, Nelson? What does that mean exactly? Okay. Well, let's say you have a credit card, right? And this credit card has a $1,000 credit limit. Let's keep it simple. $1,000 credit limit on your credit card, right? So you have this $1,000 credit limit, and 10% of $1,000 is $100, right? So you let's say you use up $500, $600, $700 on this credit card, right? Okay, Nelson, I have this balance. I'm gonna pay it down before my due date. That's the trick, right? You don't pay it down by the due date. You pay it down before your statement date. Your due date is when the creditor wants you to make the minimum monthly payment to them, right? That's with interest in the whole 9 yards, okay? But when it comes to you, the consumer, your statement date or your end of your billing cycle, but your statement date is what they report to your credit report, not your due date, your statement date. So in a scenario where you have your credit card, all you gotta do is call up each and every credit card company you got. hey, ABC credit card, right? When is my statement date? It's normally the same day every single month. 15th, the 12th, the 21st is normally based off of when you open up the credit card, right? But you'll confirm when is your statement date, right? And then your goal is to pay down the balance under 10%. Now, if you can't get the 10%, try to get under 30. But if you want to get all of your credit points, right? Get it under 10% before the statement date. Make sure that the new balance is posted to them before the statement date. And then that's what they report to credit. They report to credit once every 30 days. So that means for a full 30 days, you can use the credit card as much as you want. But when you get to that statement date, get it paid down, right? Get it under 10% of the credit limit. Do this for all of your credit cards. Again, you really only need 3 accounts. Have 1 installment account and have 2 revolving accounts. So have an auto loan, right? You don't have to go super high with a monthly payment unless you just really want to. It's your prerogative, it's your money, you pay your bills, you do whatever you want. But you can have an installment loan, and then you have 2 revolving accounts, 2 credit cards, right? You can have more, right? But ideally, you want to have at least 3 because that'll give you a good, healthy dose of credit mix and a healthy dose of activity, positive reporting on your credit. Now, so we're already over 650, right? Now, what you'll notice a lot of times when I go through these videos, I'll talk about getting to a 640 credit score. Once you hit a 640 credit score, you start the home buying process, right? It's going to get you qualified for most programs out there. But if you want to be an overachiever, and I love those too, don't get me wrong, try to get to that 850 credit score, get over that 700 credit score mark. Now, let's talk about what weighs down your credit, what pulls down your credit, right? What pulls down your credit is derogatory information, right? This is adverse or bad reporting, right? Not bad as in it shouldn't be there. Bad as in, oh, that doesn't look good. So obviously late payments, right? Late payments just pulls your credit, right? And it's different from everybody because it is an algorithm that the credit bureaus run. But just know, late payments you just don't want to have. Do everything in your power to make sure your payments are made on time. Okay. If you're going to use credit or your credit card, right? If you don't have the cash for it, right? Ideally, credit cards should be used as emergencies, or they should be used with very savvy type of thinking, like, oh, I have this cash, I have this money, or I have this opportunity to do something, right? I'm gonna put it on my credit card, but my goal is to ideally pay it down, or I'm going to make sure I make the minimum monthly payment. But my goal is to get that balance back down under 10%. Okay. Now, outside of late payments, you have collections. Okay. Now, I want to talk about collections. Out there, you'll have a lot of credit companies and credit repair agencies and specialists. And no disrespect to their industry, but I'm just going to be honest here. Okay. Can you go out there and remove a collection or a charge off or anything like that off of your credit report without paying it? The answer is yes. You can absolutely get off your credit report. You don't have to pay it. It's gone. But it doesn't mean it doesn't exist. Okay. Let's think about the collection companies and what their business model is. They go out there and they buy this bad debt, late payments, charged off, collections, so on and so forth, right? Write-offs, all this good stuff, right? The creditor can't collect, doesn't feel like chasing you down to collect. So they sell it on the open market to these collection agencies, right? Which they'll pick up the debt, normally pennies on a dollar, 30 cent, 10 cent, maybe less. I don't know. It's not my industry. But I know they pick it up, pennies on a dollar, and then they then start to reach out to you to collect payment, right? And their leverage in doing so is we're going to report it as a collection to your credit report, just that straight out. Well, that pulls down your credit report, especially the more recent that it is, right? The more recent it is, the status meaning open collection, right? So a newly open collection pulls down your credit report. Okay. Can you get it back in contact with your credit specialist and get it pulled off? Yeah. But then another collection company can buy it and put it back in your credit. And now you start to cycle back over of calling your credit specialist and paying them again to get it removed. just for another collection company to buy it and put it back on your credit. And the cycle keeps going on and on. And I'm speaking from experience. I've worked with people which I help get their credit, and it happens. And it normally always happens at the worst time, right when you go on the contract, right when you're trying to go through the loan buying process, right when you're about to close and they do a soft credit check and a new collection popped up, your credit score dropped, and now you don't qualify. There's a lot of situations where the debt rears its ugly head, right? It's just like a weed, right? You got to kill it at the root, right? And the only way to kill it at the root is to satisfy it. Okay, satisfy it for 10%, 30%, 50%, whatever you can negotiate with them. But once you satisfy that debt with that collection company, just know the debt out there doesn't exist for another collection company to go and buy it. Then you have your credit specialist come in and remove the paid collection, paid charge off, paid derogatory status remark off of credit, and that's how you completely clean up your credit report. So we talked about late payments, we talked about collections, let's talk about charge offs. Okay. Now, charge-offs, they cause some serious damage, right? Especially if it's a revolving account. I've seen that cause some serious damage. But charge-off is a situation where you haven't made your monthly payment, right? And now the creditor has said, you know what? We're going to contact the IRS. We're going to let them know that we're writing this off as a loss to them, and we're not going to pursue any kind of payments from this person ever again, right? But then they're reported to your credit report. Now, for all that don't know, this stuff can stay on your credit report for up to 7 years. Okay, but the clock restarts when you make communication with them, just communication. Okay, you have a open, you have a reported, and you have a date of last action. Okay, the open is when they open up the debt on your credit report. That's when the collection company buys it and start reporting it to your credit report. That's when you open up a credit card and the open date shows on the credit report and so on and so forth. So you have your month and your year when they open the debt with the credit bureau, reported to the credit bureaus. Then you have your reporting date, right? The frequency can vary, but normally is every 30 days. In most cases, they're going to report to your credit report. And then you have your date of last action. Your date of last action is when you did something with them. As simple as a phone call and talk to them over a phone is considered a date of last action. So why am I saying this? Well, you can have a collection that's 6 years and 11 months old. You're 1 month away from it coming off of your credit report. And then boom, you talk to them on the phone. You got a date of last action kicked in, 7 years started all over again. Okay. Now, when it comes to charge-offs are they're going to put down your credit report. Again, it's all about the algorithm, but I'm talking about cleaning up your credit and looking pristine when you're coming to a lender to get qualified for a home. Credit is the second reason, not the number one reason, but the number two reason people don't get qualified for a house. So getting rid of charge-off, same manner, right? I've seen lenders charge off a debt and then it still go to a collection agency, right? And then when they collect and you settle, you get like a 1099A form, I believe, 1099A form, but they send you this form that you file with the government to count as income because you sell it for less and it's reported to the IRS. But long story short, cleaning that up off of credit is important. Again, you can get with a credit specialist, you can get scrubbed off, pulled off of credit, but it doesn't mean a collector, a collection agent out there won't go and buy it and start reporting it to your credit report. So we talked about late payments, we talked about collections, we talked about charge-offs, right? Those are your big main ones when it comes to repayment. Now you have foreclosures, you have short sales, you have bankruptcies, okay? Now those are more severe, right? Now when it comes to bankruptcies, if you file bankruptcy and you discharge it, in most cases you're waiting 2 years before you start the home buying process. Okay, let's say you go into bankruptcy and you're in a Chapter 13 and you're making payments back, right? Well, you can get into a house too, provided that you can show that you've been making monthly payments on time for at least a year, right? Through your bankruptcy, Chapter 13. Let's talk about foreclosures, okay? In most cases, when you go into foreclosure, you can go with a program like FHA, but 3 years seasoning, 4 years some lender, but 3 years, right? Depending on lender overlays, and that's another video that we're going to talk about. So we have those big major ones. Now you also have government reporting. Government reporting like child support. That's the one that I see, pretty consistently. So child support on the county level, reported on your credit report, especially if it's in arrears or anything like that. The lender is going to be looking to make sure that you are making payments on time when it comes to child support. Now, outside of credit, okay, so credit, you got your credit score, you got your payment history, you got your credit usage, you got your derogatory information. Also involved with credit, you have your total accounts. Total accounts account for about 10%, that's 55 points. But total accounts, this is the number of open accounts that you're using in good standing, right? Normally, 20 or more is the number that they're looking for. This is if you want to have like perfect credit. But you have 20, 15 credit cards, whatever the case may be, 5 installment loans, and you actively use them all, but you just manage them super well. That gives you about 55 points, just the number of accounts you have open. Another 10% roughly is having to do with credit age, how long you have had these credit accounts open. 7 years or more is really what they're looking for. 10 years or more, some lenders. But as I stated earlier, when it comes to getting a mortgage, just get over 640, and we're talking about just payment history and revolving credit. Get rid of your derogatory accounts. That way, it's not weighing down your credit. For those that say, "Hey, Nelson, I have these late payments on these accounts, but I'm paid up and I'm current now," or like a collection. It may make sense to close the account, get with a credit specialist, and remove it off credit. I do recommend, for those that's not fully, great at credit, take a time and reach out to me. Put links in the description below that will allow you to reach out to me. We can do a free credit consultation. We can start the home buying process, get you a list of items that we need. If we need to bring in the big guns, like a credit specialist, I'll get you in contact with my credit partner that I work with. She's phenomenal, and be able to really help you and get that credit clean. But again, always remember, 640, that's the goal. If you get over 640, you're higher than 640, great, right? But home ownership is more important than renting, okay? The next video that we're going to talk about is going to be in regards to the Cavers report. Cavers report, right? This is the hidden report that most people don't know about. But the Cavers report having to do with the government, okay? Thank you all for taking the time to speak with me here. I hope this was some great information. If there's anything that was confusing, or if you need a more in-depth explanation or an example ran, please like, comment, share, but drop your questions in the comment section below, and I can go into more detail on something a little bit more specific when it comes to credit. Thank you again. See you on the other side of home ownership.